Welcome to today's GNCC webinar focused on the path forward, where we explore what lies ahead for Canadian businesses. My name is Mishka Balsam, and I will be your moderator for the next hour. This particular webinar is brought to you in partnership with BDC, and we are joined today by a number of local BDC staff. And thank you for all that you do to support entrepreneurship and entrepreneurs specifically here in our region. But I wanted to also give a special shout out to Mo El-Kayet. He is a board member with our organization and also a manager of major accounts for BDC. So Mo, thank you for being with us today as well. The purpose of our webinar series over the past 13 months is to better understand how COVID-19 has impacted our lives so far and to start thinking about tomorrow. How will this pandemic change how we live, how we work, how our business will function? How has this impacted our corporate partnerships, supply chains, and international affairs? How will it reshape our collective values and priorities? It is critical for us to convene for conversations that encourage us to stretch our minds while determining on how to best move forward. The decisions that we're going to make in the weeks and months to come will be the foundation of our economic recovery. Today's conversation specifically will look at trends that the pandemic created and that will stay with us once the economy reopens up again. What will a post-vaccine normal look like and how can we prepare for it? And what are the lessons learned over the past year that will help us build resiliency for the future? It is my great pleasure to be joined today by Michael Denham. He's the President and Chief Executive Officer of the Business Development Bank of Canada, BDC, Canada's only bank devoted exclusively to entrepreneurs. He leads a team of 2,300 people across Canada who work every day to help entrepreneurs succeed by providing the guidance and financial support they need to build resilient and growing businesses. A strong advocate for entrepreneurship and innovation, Michael drives BDC's positioning as the #1 ally of Canadian entrepreneurs. Having more impact on more business owners and making it as easy as possible to do business with are among his main priorities at the helm of BDC. A seasoned business leader with more than 30 years of senior management experience, Michael held senior roles at McKinsey, Bombardier, Accenture, and Aquaterra before joining BDC. Based in Montreal since 2001, Michael is bilingual and holds a Bachelor of Arts from the Woodrow Wilson School of Public and International Affairs at Princeton University and a Master of Science in Economics with distinction from the London School of Economics. Michael, it is a great pleasure to have you with us today.
Mishka, thank you.
And to all the participants who are here, thank you for giving us your lunch hour. And we are hoping this to be a very interactive session. So to become part of the dialogue, we encourage you to use two functions on Zoom. I probably don't have to explain them anymore because you're so familiar with them. But there is the hand symbol that is right next to your name. By clicking that, we know on our end that you have a question. And what we will do is we will unmute you. Please just watch for it, and that allows you to ask a live question. And the second option that is available to you is the chat function. It's likely at the bottom or on the right-hand side of your screen, a field where you can type in the question. We can see it, and we'll do our best to get to it. And lastly, we had a number of questions that have come in via social media and email, and we're committed to getting to all of them. So let's get started and make the most of the next hour. I thought, Michael, maybe the way to start out with is kind of asking you maybe to give us a little bit of a national perspective. You have a pan-Canadian presence at BDC and work with over 60,000 business owners across the country. It has been a little bit over a year now since the pandemic struck. What do you see and hear from business owners from across Canada? What's the situation right now?
So, Mishka, thank you. And I want to thank the Chamber as well for creating this opportunity for me. And also thank my colleagues. Paul Goodwin's our Business Center Manager from St. Catharines, and a number of my colleagues from BDC are on the call. So kind of welcome and thanks for all that you're doing. So yeah, I think we all remember where we were a year plus ago. And for us, it was Monday, March the 20th. And we decided on Friday that everybody was going to kind of work from home on Monday. And even though we had gone through our disaster recovery plans and contingency plans so many times, they were all kind of theoretical, abstract exercise. This was the real thing, Monday, March the 20th. and everything worked. We're able to really be productive from first thing Monday morning, and we've been working plus or minus remotely ever since. This is my home away from home, my office in the house. I haven't been to the office once since March. And like many of you, you kind of adapt and you do what you need to do, and you just try to be as focused and as productive as possible. So BDC, we're, as a context to the answer, Mishka, to your question, we're the bank that focuses on entrepreneurs. We provide loans, we provide consulting advice, advisory services. We're also Canada's largest venture capital investor. So my views on the situation where we are now in the pandemic results from a lot of time I've spent with colleagues and teams. So overall, as you all know, the employment picture in Canada, we're about 600,000 jobs fewer now than where we were a year ago. Bank of Canada, most banks think we'll get back to where we were overall sometime in 2023. The averages, though, mask, I think, some real differences where there are sectors like manufacturing and tech that are frankly much more buoyant now than they were a year ago. And many sectors that are, frankly, the bread and butter of the local economy, restaurants, tourism, entertainment, et cetera, continue to struggle. So it is, and then when you double click even more, you look at the effects on very small businesses, fewer than 20 people. You look on the effect of women entrepreneurs and other demographics, and it remains really, really difficult. So I think some of the average numbers are a bit deceiving. There are many sectors that continue to struggle. Many demographics continue to struggle, and clearly the most recent announcement with respect to the next 4 weeks of confinement isn't going to help anybody in terms of the kind of restaurant entertainment industry. But getting across all that, there are four themes that seem to be common across the country. First is there are real issues around mental health as it relates to entrepreneurs, and every time I speak, I encourage people to be self-aware, to talk to their loved ones, to talk to their colleagues at work, to seek out help and guidance where necessary, because it is not surprising at all, given the stress we're all under, that mental health issues are emerging, and people just need to acknowledge it and get the help they need to get better. Second thing that's common is that investment levels on average tend to be relatively flat, even though some sectors are more buoyant. There isn't a ton of confidence right now, so investments are flat. Credit conditions are fairly normal. If you look at the number of the percentage of loans being authorized right now across the industry, not BDC, but across the industry, they're kind of at historical standards. So it's the credit market continues to flow quite well. And then lastly, Mishka, and I'll stop at this point. One thing that's interesting is one of the objectives, I think, of the various policies that governments have put in place was to make sure they froze and kept intact as much of the business stock as possible, with the variety of supports, the wage subsidies, the rent relief. And we look at the numbers in terms of levels of bankruptcy and also levels of filings. The policy is achieving a lot of its goals, and we're having many, many fewer bankruptcy cases, many fewer filings, many fewer companies stopping to exist now than we've really ever had by historic standards. They'll be built to pay for all this, but I think the objective of trying to freeze that stock in place is being accomplished.
Yeah, Michael, I actually really do appreciate you breaking it down for us too, and looking at saying like the impact actually on sectors is different. It's not the same in every region across the country. It's not the same impact on every sector. The impact on women is different at the same time too. So we really do appreciate you bringing those aspects forward. But may I also say thank you so very much for bringing up the mental health component of it. So we have spoken to many economists and others, and we don't often hear this from institutions actually bringing it up, and so early in the dialogue as well. It is something that is of great concern, and there have been recent studies that have been released as well from Canadian mental health associations that actually speak to exactly that aspect of it. We at the GNCC have held a number of webinars in just ensuring that in this virtual world, how do we ensure that our colleagues, our staff is actually well and is taking advantage of all the resources that are available to them to ensure their own well-being. So I think this is going to be
the pressure that entrepreneurs are under these days. It's intense, right? Because the family pressure, the parents, the children, And then just all the pressure, things that used to be relatively smooth at work just aren't smooth anymore. And every entrepreneur I know feels an obligation to his or her employees, and that pressure can become very, very oppressive. So I'm glad you are focused on it as well in the Chamber, Mishka. It's such an important topic.
Yeah, and I can actually say we are members of the Ontario and the Canadian Chambers of Commerce as well, and their focus is on the same issue that you have identified too. So really do appreciate it. And I also appreciate the Canadian perspective of it, but I was wondering, because most people that are here with us today, most of the participants and attendees are running Niagara businesses. If we can look for a moment and seeing that, what does it mean to business owners in Niagara or in the greater Niagara region? How do we compare to the rest of Canada, to the rest of Ontario, just in the economic impact that this pandemic has had?
So I can answer that through some figures that I'll take you through. But you and your colleagues are living and breathing this. But here's what I see when I compare your region to other regions in Canada. I'm sure you've seen versions of the same data, Mishka, you and your colleagues. But overall in Canada, we're at about 96% of our overall employment levels going back to last March. And I give some talks like this in areas. I was speaking to a community in the interior of British Columbia last week. The pulp and paper and softwood lumber is a key part of their economy. And that sector is kind of going through the roof right now, both in terms of pricing and volume. So this community is actually back way beyond where it was 12 months ago. But sadly for your region, that's not the case. And again, 96% overall. At the local level, the regional level, it's 88%. And again, large part because of the importance of the kind of service sector, hospitality, entertainment sector. So 13% of employment in your area is in accommodation and food. The national average is 7%. So that explains a big part of the overall difference. And hotels and restaurants are only at 42% of the pre-crisis level, whereas in other parts of the country, hotels and restaurants are up at 3/4 of their pre-COVID level. The border being closed is a clear part of that. Capacity constraints around casinos is another part of that. So overall, the picture actually is, I use the word worse in employment terms than it is nationally, than it is province-wide, than it is in other regions, because of the importance of the service, entertainment, hospitality sector. And Mishka, as I was saying to you before, one of the again, I've been working from home now for 13 months and become a bit of a hermit in terms of physical contact. But the first conference I've signed up for, knock wood, it'll happen, is going to be in September at the Queen's Landing, and I'm almost counting the days till I can get back there. And hopefully, in September, we've got through a lot of this, and the tourism sector begins to rejuvenate itself in the peninsula.
Yeah. I think our data locally mirrors what you have mentioned as well. We're harder hit because of the accommodation and food services sector and the impact there. And then also all the other businesses that are directly linked with it as well. So you're looking at retail being a huge impact and impacted by it. And as you had mentioned, the border opening or the border closing, and that lack of traffic has naturally truly impacted Niagara disproportionately, and therefore will also take us a little bit longer from a point of recovery that is there. Yeah. But you speak to a lot of businesses. We've gone so far over the last 13 months. What are the main lessons that this pandemic has kind of taught businesses that are there? One of the ones that we often have spoken to is that maybe businesses and actually municipalities and government levels, we're not set up to be actually resilient. I think we focused for 10 years and longer of being efficient versus resilient. And I was wondering if you can speak to that.
Yeah, that's a good, I will speak to that. But the one thing that is common to entrepreneurs, I think common to probably everybody on this call. And again, we have a portfolio of over $400 million in the area. So Paul and the team are in constant touch with their clients. One thing that's common is the resilience of entrepreneurs. And unlike some of the institutions you described, entrepreneurs are characterized by the resilience. And I think if we were to do a bit of a tour de table with everybody on the call, we'd hear great stories of reinvention and resilience and success, notwithstanding the challenges that affect us right now. But there are three I just want to share with you just to illustrate the resilience and the quality of leadership that you see from entrepreneurs. And these are three from the area. And you know them all much better than I do. The first one's Big Country Raw, which is a very kind of high quality business focused on pet food. And again, the Rob and Geraldine Brower, the leaders of it, I think spotted early on in the pandemic that the pet industry, pet food was a great place to be for all sorts of reasons. And they made some moves, they made some investments, they expanded their warehouse capacity. And because of that strategy and initiative taking, they have a lot more competitive business now than they had back then. And they've done extremely well distributing their product, which is really high quality, coast to coast. And Bench Brewing Company, Matt Giffen leads that. Again, it's life changed radically for this company, for so many others. But again, with the curbside pickup, home delivery, et cetera, again, great brand, great product. I think Paul and my colleagues are probably a big source of their volume growth, have been able to do well during the pandemic. And then lastly, Gibby's Electronic Supermarket. Dwayne Gibson owns that. Again, they were in a place where they had a very robust e-commerce capability to begin with, but they were able to kind of build on that, accentuate that, extend that. And as so much of our shopping shifted towards online, they had the basis and the foresight to adapt that basis to become even more competitive. So again, these are examples of entrepreneurs that kind of had the resilience, had the forethought to adapt their business to succeed in what have been tough times. And I just know, again, if we were to go around the table right now, we hear lots of great stories of resilience and foresight on the part of entrepreneurs.
We hear the same on our end. And one of the biggest changes that has also taken place is the digitalization of so many businesses and ways for business to connect with their consumers, with their customers, within their supply chain. And I think it's something that is here to stay. And that will be a really interesting one as we look forward. But we have a few questions that are coming in, and let me go get to one of the ones. And this one is by Sean Polden, and he's asking, has BDC received a mandate to change its risk assessment criteria to reflect the fact that we are in a riskier time? We didn't do as well in 2020 as we would have if there wasn't a pandemic, but there's no real history prior to it or since they actually launched their business in 2019. And I think it's an interesting question just on how to assess the risk and the risk assessment of each business.
Right. So it's a good question, and we've done our best to. We always take much more risk than the chartered banks. On average, the level of risk we take is somewhere 3 to 4 times the level of risk that most chartered banks would take. And that's why we're here. That's the role we play. And we have adapted and put in place new programs since the pandemic started to take more risk and be more accessible. The most recent one, though, is this program we can come back to if you like, which is called HASCAP. And it's a program that is actually delivered through the chartered banks. We worked with the banks to design it. We provide full guarantees to the banks. And it's designed for companies that have been kind of very hard hit by the crisis. And the proof is that they had revenue losses of over 50% in 3 months since the crisis started. The interest rate is very affordable. To work through the banks to make sure that we get the full reach of all the banks and all the credit unions in the country so that this money is as accessible as possible. And again, this allows us to be involved in situations where money's being lent to very high risk clients whose businesses in many ways have really been hit hard at affordable rates. And the program's been very successful thus far in getting credit moving. So we've put in place a whole variety of things which has been designed to make credit more accessible, especially to those companies that for reasons no fault of their own, demand fell off. They had a hard time getting credit through traditional channels.
I appreciate that, actually. And I just wanted to also let all participants know that we're actually recording this session. And if there are any programs or suggestions that have been mentioned, we'll make sure to actually follow up with you directly too and provide you with the links accordingly to get you directly connected with any of the resources or opportunities that might be available to you there. But this particular webinar is being recorded and will be made available on our website as well as via email to you too. So just in case you're wondering and how to access maybe some of the things that we're speaking about today, this is one particular opportunity that's there. On that note, actually, is what advice would you give to entrepreneurs to prepare for a post-vaccine world? What should they do now before we even look at what it might look like? But what can they do to prepare for it right now?
So one of a few things, one you just raised, which was e-commerce. And what's interesting is that before the pandemic, look at all the kind of stats, the World Economic Forum stats and what have you, comparing Canada to other countries. And we had a much lower level of digital intensity in our country. And many fewer transactions were done electronically in Canada than elsewhere. That's all changed because of the pandemic. So companies that had never transacted through e-commerce before now do so. So restaurants, sporting goods, Main Street shops, etc. And more importantly, the behavior of buyers has changed. And I think we're now comfortable calling restaurants and getting food to pick up. We're comfortable ordering things and buying things through e-commerce that historically we hadn't done. And that trend's here to stay. So I think every company needs to recognize that having a functioning, transactional, appealing website is now table stakes for business going forward. So that's one. Two is every company's been different in this regard, but it has to do with telework. And again, if you're working in a manufacturing process, telework isn't an option. But for larger companies, some service companies, office type companies, telework is something that we've all been forced to do for the past 12 months. Certainly places like Toronto, Montreal, New York, where traffic's bad, it's a big issue. That's probably less the case in St. Catharines and Niagara. But that said, I think people have proven that you can be productive working remotely. And I know most employers now that have had we're in this category as well, their teams working from home are coming up with plans that are a bit of a hybrid model, where it's not work from home all the time, it's not in office 5 days a week, but it's going to be a combination of the two. So thinking of telework as something that's here to stay, I think is an important aspect for all companies to think of. And then lastly I think we've all learned, because of all the uncertainty, we've all learned to manage our cash situation much better than had been the case. Some of the clients I spend time with are literally kind of week by week managing their ins and their outs to make sure that they have the resources needed to continue. And I think that hopefully we don't stay in that zone for much longer. But I think just the discipline of being on top of your cash flows, managing your cash flows tightly, seeing how that can lead to opportunities for investment or growth, I think is going to make most business leaders much better as business leaders going forward. And that, I think, is a third thing that we were forced to do through necessity for the past year that is going to stay with us.
Yeah, I couldn't agree with you more, because I think it will actually strengthen the businesses that are there, will create more resilience, and also will allow for actually longer term, better investments in some cases. Because if we have the cash flow to do so, maybe hold on to it for a little bit longer and then make that investment. I think we are there. You touched on a really interesting point, and that was actually related to the hybrid office. We are same as you are, working from our home offices and looking and identifying what does the future look like for us and moving forward from there. That is also going to impact where people actually are going to live. So it's not just going to impact that aspect of it, but we have looked at even in Niagara, and we have seen a high influx from people from outside of Niagara, from the GTA into Niagara. People are saying, like, we don't need to live close to where we work anymore. And that is going to be a significant change too. And one that is actually being welcomed by many people. Something that we would have never seen like this and never anticipated to the same degree. So it's an interesting one.
And what's a bit counterintuitive for some people is that, Misha, a lot of the industries that have really come back, like manufacturing and tech, we are going to be bumping into, if we haven't yet, real issues around labor shortage, which is kind of ironic, right, given the state of the macroeconomy. But labor shortages were a big deal for a lot of industries before the pandemic. These are all now at employment levels frankly beyond where they were. You combine with that the effect of basically no immigration to the country for the past number of months. And we see already in many regions and many industries labor shortage. So to your point, the more that we continue to be adaptive and flexible in terms of remote workers, telework connection, the more we can reach into different geographies that may have a different labor situation to address our needs, especially around key skills. So I think it is, this isn't just a theoretical need. I think it is or will be soon a real need for companies in these sectors that have bounced back so well.
Yeah, absolutely right. When we look at NAGA specifically, when we look at the end of 2019 going into 2020, we experienced the lowest unemployment rate. And to the point, like you said, that actually employers had a really difficult time actually attracting the skills that they needed to perform the duties that were there. And so we ran into that challenge. But even now during the pandemic, we have a skills shortage when it comes to skilled trades and other areas of it. And it's a huge impact that is, and we can see the delay in output because of that. So I think we will see significant changes that we have. But I want to come back to another attendee's question here that they have put forward. And this is from Alvaro Crespo. And they're asking what industry will likely survive and die, and which ones will die, but also why will these industries maybe fluctuate and go through such significant changes?
I'm not sure any industry. I wouldn't say any. I think some companies may die. That's just the capitalist world we live in. But I don't think any industries are going to die. I think depending on the pace, they will all come back to level of being robust. Tourism is going to come back. Hotels are going to come back. Maybe different circumstances, different numbers, but conferences are going to come back. Air travel, look in the States, air travel's come back big time. I mean, the transportation index on the Dow is probably the most attractive index right now because kind of planes are full, people are moving again. So I'm fairly optimistic that in time, we will get back to a world where we haven't kind of lost industries, haven't lost sectors. I think there will be some industries and sectors where we've seen disproportionate growth. Obviously, kind of healthcare, PPE, biotech, et cetera, is going to continue to grow. We just issued a report today that folks are welcome to access on bdc.ca about climate change, decarbonization, green. And it shows that entrepreneurs, I think more than any other segment of the economy, are really convinced of the need to adapt what they do to lower emissions and become more productive in climate terms. So I think companies that are focused on kind of clean tech and that angle are going to see disproportionate growth. So these have been incredibly difficult, taxing times. But as I look at countries, especially in the US, that are emerging, I feel comfortable that we're not going to be witnessing the demise of certain industries and certain sectors.
Yeah, and it's interesting too. I just recently looked at data from NAGA and looked at how many new businesses actually have started out during the pandemic too. And we had here in NAGA, it's a combination between businesses that hire and have employees and ones that are solopreneurs, but it was around 700. We don't have numbers yet for NAGA of how many actually had to close, but I think it was optimistic to seeing that even in very strained, very difficult times often leads to entrepreneurship and opportunities that people are seeking out. And that has been evident here too.
We just celebrated our 75th anniversary. So I went through the archives and the annals, and there are a bunch of number of videos over the years that BDC produced. And there was this classic one done in the mid 80s, and it was post-recession. And what you actually do find is insofar as a recession leads to job loss, leads to people looking for new opportunities, you do tend to see the rise of new companies and entrepreneurs as we emerge from tough economic times. So it's perhaps something that's kind of driving this uptick that you're mentioning in the Niagara region.
Yeah, and I think we've seen the same after the 2007-8 kind of recession that we had. We saw actually an increase of entrepreneurship during this time. And I always am encouraged by it. I love seeing it. And it results in exactly the companies that you had mentioned earlier, you know, and the movement that we see in other areas. And it's nice to see local businesses supporting it at the same time. But I want to touch on something, and that is kind of a little bit of a follow-up of this question that has come in that Alvaro had put forward, and that's the question about mergers. Are we going to see bigger companies or organizations merging? Will we see more of that happening? And would love your opinion on that.
It's a good question. We've seen some already. Roger Shaw, most notably, some mergers, which is not yet closed, but has been announced, some out west. So, I mean, in theory, we should, because what tends to happen is in industries that are struggling, there are some kind of weak balance sheets that need to be acquired to continue. In industries that are growing, the successful ones in those industries want to kind of turbocharge their growth by acquiring. So I would anticipate that we do see an uptick in acquisitions. The flip side, though, there are a lot of acquisitions that come from kind of generational transfer,
yes.
where entrepreneurs on average are kind of in their 50s and look to exit the business and pass it on to the next generation. Since a lot of businesses right now aren't in kind of great shape, don't have a kind of stable balance sheet, a lot of entrepreneurs may kind of stay in these businesses for a couple of years to get them healthy again before selling. So there come forces, some forces that argue for more acquisitions, some forces that may slow things down. So it's frankly hard to know, but I think both of those forces should play themselves out.
Yeah. And I think in all of those ones also create opportunity for other organizations too. This is a question from one of our participants, Agostino Mena. Thank you for asking it. And they're asking, you mentioned that the BDC takes on higher risks than the banks. Can you give us an example on a venture BDC or venture fund invested in that would be too risky for a bank?
Sure. So I'm going to make sure I answer this precisely. So the two ways to think about risk for us are both in terms of the loans we do, and again, banks extend the loans as well as investments we make. And by and large, banks aren't big investors. There are other groups that do the investing. And on the lending side, for example, we have an online financing platform where we loan on a unsecured basis up to $100,000. And what we look at to assess whether we're going to authorize a loan or not is the kind of creditworthiness of the individual and hence the probability of default. And when you kind of compare it, our thresholds versus those of banks, again, we're significantly down the risk, up the risk curve in terms of lower levels of creditworthiness and a higher likelihood of default. So in our lending business, just the models we use are so different that it sees us lending to higher risk businesses and individuals than banks do. When it comes to investing in venture funds, we invest in funds. We also invest directly in companies. And by definition, the way venture capital works is there are investing syndicates that form. So when we invest in a funding round for a company, we would be one of 4 or 5 or 6 other investors. And that's just how venture capital works. So we would operate at the same level of risk as all those other investors. So the different levels of risk are probably more pronounced in our lending business than venture capital. The fact that we're in venture capital shows that we love risk. But when we invest in venture capital, it would be akin to the levels of risk that our co-investors take alongside us.
Yeah, no, that makes actually full sense. If anyone has a follow-up question to it, let us know. We'll most definitely address it. And this is coming forward, a question that we were asked that has been actually given to us a couple of times. And that is a question and has to do with the time. When do you anticipate a return to normal for businesses in Canada? We touched a little bit on how and what it would look like, but will it look like much of what was in beforehand, and what is kind of the time frame? Because we're so immediate, we hear changes happening. We are in another lockdown right now for the next 4 weeks, and then there's such level of uncertainty each and every time, and such fluctuations and variance that we are dealing with. What time frame are you looking at?
Yeah, you know, it's always it's so dangerous to answer that question, because I don't think any of us, even 5 weeks ago, saw this level of lockdown and confinement coming. Look at the situation in Alberta and BC, where there's a real mix of variants that are in the market. So it's Mother Nature's just been so Mother Nature's been so hard to pin down, and as a result, it's been so hard to get any sort of comfort around kind of time frames when life gets back to normal. So I mean, our view is that we anticipate being back in our offices, which is a proxy for normality, at least in part, in Toronto and in Montreal in September. We'll be doing that on a voluntary basis, but those are our plans. And when we look at our investment plans and lending plans for the year, we anticipate, frankly, the next 12 months being a kind of transitional period. So we kind of look at we take our lead from the Bank of Canada banks and our chief economist, and most views is we're probably not back to normal in macroeconomic terms until sometime 2023. But I anticipate life will feel much more like normal come the fall.
Yeah, we hear the same actually from our business community too. And it's a difficult one, and it's probably linked partially to hopeful thinking too. And I think we need it at this point, and it's important. We had EU offer through BDC a high number of financing support for entrepreneurs. What is still available for business owners? What are some of the things that you're saying, I wish more people would tap into this, more owners and entrepreneurs would explore this, and this is something that is still available. And we have held a number of webinars just on all the different things that are available, critical, like grants, resources, and other things. And this type of information is instrumental to businesses as they move forward.
So a couple of suggestions, Mishka, and Paul Goodwin and the team can spend a lot more time with folks on these than we can right now. But the first thing I say to everybody is, if you go to bdc.ca, we have a massive amount of tools and perspectives and ideas and frames and benchmark data that's there to be used. It's all for free. And we get millions of people, frankly, from all over the world visiting BDC, entrepreneurs from all over the world, because they love the perspectives, the material we offer, which is really helpful. So for those that haven't gone to bdc.ca to see what's there, I encourage you to do so. It's well organized, it's relevant, and it can help your business literally tomorrow. The second thing is there are a number of we're going to open for business in terms of the lending we do. But the one program that I do want to underscore again is this HASCAP program, because this is really meant for industries that are in the tourism sector, food, accommodation, retail, that through no fault of their own have been hit really, really hard and have had that steep 50% decline in revenue. And I think anybody in that category, I assume, is well aware of this program and has talked to his or her bank or credit union already. But for those that haven't, do so. And again, it's very attractive rates of interest, very non-onerous terms and conditions. It's really designed as up to $1 million in amount based on size, and it's meant to be a kind of last dose of credit to help get through to when times get back to normal. So that's the one program that is a couple of months old that I really want to make sure people have been hit particularly hard.
Yeah, no, I appreciate that. This is a question, and it came forward. It was submitted to us by Sanil, who's also here with us. And they're asking that sometimes it feels that one is being penalized as a good client if they try to manage their business in more efficient ways during COVID-19. And it's not an unusual position. We sometimes hear this. So everyone, these organizations that have everything in order, and are moving ahead, have maybe used some of their reserves and their cash funds to invest in other things, but then don't qualify for some of the grants. When you look back on the last 13 months and the learning that internally takes place, do you find that maybe is we've left some businesses with that opinion?
I think, and again, I'm going to speak, and I'm going to speak a little bit in terms of the whole range of programming that's been offered. BDC is not a part of a lot of this, but I know the CEBA program, for example, yes, was designed to support all companies, and the uptick on that has been huge. But a lot of there are only so many resources that can be deployed responsibly. So the bias has been towards companies that really need the help. So the wage subsidy program, the rent relief program, this HASCAP program are all triggered by revenue losses and revenue shortfalls. And again, these are not companies that are that need the support because they've done a bad job running their business. The best hotel in the world for the past 12 months, I guarantee you, doesn't have good financials and needs help. So it's really because of the lockdown rules, the border restrictions, the public health issues, companies in these sectors, frankly, they've lost their demand through no fault of their own. So I think there is a comfort level in government that providing support to these types of companies is the right thing to do. And I recognize that some companies who have fared, have been in markets that have fared better, haven't been able to tap into the same type of support. But I'm not sure what you do about that.
Yeah, I don't know either, because we are so codependent on all the businesses that are there. We're interrelated, and these unusual times. But I do also believe that we will look back once we are slightly past this and look back at all the programs. And a lot of the programs have also been adapted during it. Like when I look at the rent relief that initially came out in partnership between the province and federal government, and then was adapted to actually reflect truly the needs that are there. I'm sure that there are probably other examples similar to that in moving forward. But one of the things we've really appreciated is actually the speed of decision making that has been done. We have never seen this at any given time in history and beforehand, and that I think has been something that businesses have appreciated. Here is a question that has also come forward, and it's: has the pandemic changed the types of business ventures that BDC is prepared to fund? There's certain industries that now are maybe considered to be high risk or too high of a risk to support. And I think that's actually a valid question from any entrepreneur, just saying, like, can I turn to you, or may I be perceived as too high of a risk?
Yeah. So we would encourage all entrepreneurs to turn to us for at least a conversation. And in some situations, we can kind of meet their needs through a loan or an investment. In other situations, we can't, but we will always try to be helpful. And for us, the issue that tends to separate those companies that we can't help versus those that we can is less a question of riskiness. You should see some of the businesses we're investing in, the venture capital side of things, talk about risk. It's more a function of kind of track record and history. Mm-hmm. Of the individual, of their credit rating, of the business performance. So it often is companies that are haven't been in business long enough, haven't been led long enough for us to get involved as a lender. And for companies like these that are led by young people, again, the organization we partner with that has expertise for these newer, younger companies is an organization called Futurepreneur. And we provide the financial resource to Futurepreneur. Futurepreneur works with the companies. Most importantly, they connect the individual leader to a mentor. So it's a combination of money and mentorship and business advice. And that tends to be our preferred way of working with some of these younger, newer companies, because Futurepreneur, frankly, with the mentorship angle, has kind of better reach and frankly, better experience in packaging the right type of support to these companies. So some things we do on our own, some things we do through partners. And this segment in particular is one we do through this really high quality partner called Futurepreneur.
Can I ask you then specifically, actually, you had identified early on in our conversation that the impact on women has been disproportionately higher. It's reflected in our unemployment numbers, it's reflected in a high number of other data as well. And are there any opportunities or places where BDC is saying, like, we are actually going to focus on female entrepreneurs differently maybe than what we have done in the past? Are there opportunities that you've identified that might be of value to our attendees?
So a very good question. And this is this issue has been pronounced during the recession. But if you look at all the empirical data, it's women have found the financial system to be less accessible than men have on average, for all sorts of reasons. And we have taken a number of steps over the past number of years to help change that. So we put in place, I think the first ever of its kind in the world, Women in Tech Venture Capital Fund, where we invest solely in companies that are led by women. And it's a large fund, and there are now others that exist and invest alongside us, but especially in venture capital, which has a certain type of culture, it was empirically very difficult for great women leading great businesses to get access to the equity they need. So that's one thing we've done. But to your point, the more traditional lending part of BDC, we have had a program to focus on women entrepreneurs. What we've done is when women entrepreneurs apply for a loan, the approval rate is actually higher on average than for a male entrepreneur. So it's not a question of lowering standards or anything. It's just a question of working with women kind of upstream of that to get them to kind of see the need and appreciate the role that lenders can play in helping them grow their businesses. So we now have a network of people that are dedicated to this task inside BDC that work as part of our lending organization to connect with, network, counsel, support, mentor women entrepreneurs to help them upstream the loan request on the business side. And that's something that we are going to continue to do and actually put more resource in place to help, given the effect on especially small women-led businesses since last March.
Yeah. We have within our chamber, we have a number of advisory councils. We have council that advises on policies. We have one for the nonprofit sector, which is the charity sector here in Niagara. Next Niagara is the emerging leaders, but one specific council that we've had and has been with us for many years, greatly successful, is called our WIN Council, as our Women in Niagara Businesses. This council, and we hear exactly that aspect of it a lot, and there's a lot of questions around it, and there needs to be, and we actually recognize it too, how much more of a direct focus we need to have in providing them with resources and connections and opportunities to grow their business too at the same time. But it is an engaged and a very passionate group of individuals and extremely hardworking. So it's great to see them being supported, and especially also supporting women in the STEM sector, which I think is a wonderful opportunity to close also part of the skills gap that is there, and the access to the skills that employers need at the same time. So it's great to see your commitment to it. Here's a question from one of our attendees, and it's Larry, and they're asking if have new trends and technologies like crowdsourcing, blockchain, cryptocurrency affected how businesses access capital? How do you see these developments, wave of the future or a passing fad?
That's a very good question. And I think it's always hard to tell mid-fad whether something's a fad or is going to last. But all those things are very relevant right now. So crowdfunding has proven to be a relevant way for companies to raise money. Cryptocurrencies, the more you read about them, the more you see they are getting translated into kind of units that can be transacted, both for physical goods as well as other financial products. And the demand for sort of Bitcoin as one is kind of through the roof right now, as you've seen its pricing. So I don't have a strong point of view of whether these are all, I think some will be with us for a long time, some may prove to be fads. But I think it's, I think dismissing these as usable tools right now is wrong. I think counting on these as kind of core tools for the future is also wrong. But I would encourage people to dip their toe in to try to learn, so that depending on how things evolve, we'll be well positioned to take advantage. At BDC, we have not, we're not doing any transactions with cyber currencies. We haven't seen the need for the companies we invest in and lend to use some of these newer non-traditional sources of financing. But they've been proven to work in other environments. So I encourage people to stay curious and learn.
Yeah, I appreciate that perspective. And this is a question from Larry, and they're asking, is there help for startups over and above the normal that's there?
There are again, above and beyond the normal is hard to, because our normal today is so different to the normal 12 months ago. But I do think that a lot of the government programming is relevant for companies at all stages of development, some more so than others. Again, our startup support as loans is through Futurepreneur to younger companies. Our equity investment is done directly by us, but we also invest in funds, and a lot of these funds focus on seed investment. So I can't think of anything that is that we haven't talked about thus far in terms of out of the normal. And I know the provincial government also has a whole series of things they put in place to support businesses now as well. But there's no particularly fresh idea I have to share that I haven't talked about since we started this discussion.
Yeah, no, it makes sense actually to me. Do you see the economic stimulus from the government affecting the rate of inflation now or in the future? Because this is different than what we have seen in previous recessions. We haven't seen that government stimulus being there. We are talking often about household disposable income being at an all-time high. Do you see it impacting us down the road?
The real question that I know economists are debating about inflation, are these actions going to produce transitory inflation, which in period inflation's with us for a while and then settles back, or structural inflation? And there's no question that with all the stimulus that's been provided, all the money in corporate balance sheets, all the money in household balance sheets, that once the economy fully opens again, there is going to be a period of transitory inflation. You see the supply constraints around chips, for example. You'll see constraints around finding talent. All those things are going to produce, I think, an uptick in terms of inflation in the short term. And that seems to be a consensus view. Where there is no consensus view is what this all means in terms of structural inflation going forward. And I think all governments, all economists would love to get inflation in the kind of 2% zone. But once you unleash inflation, it's hard to rein it back in. So I don't have a particularly differentiated point of view on this. I know with the various trillion spending packages in the US, and you have both fiscal and monetary expansion at the same time, there are some concerns about inflation that are being discussed, but I frankly have a deference to the experts on this, and until there's consensus on experts that we should worry, I don't worry. And we're not adapting our business plan at BDC. We have scenarios that we plan for, but our base case does not assume a dramatic uptick of inflation in the next number of years.
How does Canada fare on the international kind of picture when you look at it and saying, like, how well are we positioned for recovery? We currently are often only looking at vaccination rates. I think this is about all we're looking at right now because of the impact that it has on all of our lives. But when you look at it and seeing on the whole picture, and look at Europe, I look at Europe a lot. We look at the spending that has taken place and the packages that the US market has offered, or the US government has offered to their markets. Are we well positioned for a strong economic recovery?
I think we are. There's a whole question around competitiveness and fiscal policy and tax rates that obviously are central to this. But what makes me encouraged about our recovery are two things. One is the US recovery. And it's the US, at the end of the day, it's the US recovery, US engine that in many ways fuels the Canadian car. And the recovery in the US looks, Jamie Dimon's note this week, for example, looks very, very promising. Some are estimating kind of 6% plus growth this year. And that's great news for Canada. And the second thing is there is a lot of dry powder in companies' balance sheets and in household balance sheets that I think will be spent and will be deployed. So both those things together, I think, are going to put us in a good place to recover. And again, the policies of the government have kept the bulk of the economic stock, SME stock, intact. So I think from a supply base as well, it'll be easier for us than other parts of the world to kind of reignite this supply base and get that functioning as well. So I'm fairly optimistic about the pace of recovery.
Yeah, and that's good, I think, for everyone here to hear as well, because I do actually feel, even when I talk to businesses and our members across NAGA, there is a level of optimism that is there. And that is, I think, good to see. This is a question also from an entrepreneur, and they're asking, BDC is a major source of funding for entrepreneurship. Has it changed the nature of the businesses that you choose to start and grow? And I think we touched on it again, but I think it's also fundamentally actually the question, are you looking at business to start out differently than what you might have looked at them in beforehand? And I think when we look internally, like our strategic plans have changed, our policies have changed, and I think it has changed for so many other businesses. Are you looking for different things now from businesses than you did 13 months ago?
No. Certainly for small businesses, what guides us and has always guided us, and we always need to get better at this, is access. So we don't have a point of view on the region, the industry, et cetera. We want to make sure that all entrepreneurs, again, with the right creditworthy business, feels that they can access financing from BDC. So we're not trying to steer towards certain geographies or certain industries. But as part of that, we try to stimulate demand for demographic groups like women entrepreneurs, Indigenous entrepreneurs, Black entrepreneurs that just statistically have been disadvantaged with respect to the financial system. So we are trying to catalyze demand in certain subsegments there. And on the venture capital side, it's the question there of, again, we're open for business to invest in all types of technology startups, but we have put in place a number of new funds that are designed to help growth in key areas. So we have an IP fund that invests in companies whose primary asset is intellectual property, but we have a unique way of valuing that and hence a unique way of pricing it. We have a fund that focuses on innovation in Canadian traditional industries, fishing, logging, mining, agriculture. We'll be launching a fund on deep tech, which is photonics and things, quantum that I don't understand. So we're much more focused on helping certain groups and certain industries grow while being open for business, frankly, for as many entrepreneurs as we can be.
Yeah, no, thank you very much. Michael, I don't ever know how quickly time goes by, but it does. And we're getting close to the end of it. And normally the way we are wrapping it up is that I usually give our panelists a chance for like a minute or two for some closing comments. So over to you.
Oh, well, thank you. Like two comments. One is, for those of you that are in industries that are doing well, kind of take advantage of the moment, seize opportunities for growth, like some of the examples I cited, because now is the time to be confident to grow. And for those of you in other industries, like tourism, restaurants, some retail, these are easy to say, hard to do, but be patient. We are getting through this. Take advantage of the support that's been made available to get through this. And just kind of be hopeful, as I am, that in relatively short order, folks will start traveling, eating, gathering together, and you'll be in a position where demand comes back and you can get your business back on its rightful path.
Michael, thank you so very much for being with us today. It has been extremely helpful. You have brought up a number of opportunities, I think, that entrepreneurs can tap into, and we'll make sure to link them directly to BDC, who's also, we're proud to have actually partnered with you on this particular very informative event. This has been recorded and will be available on our website and will be also directly emailed to all participants. So thank you very much for joining us. If you have any specific questions or want to have more information, please also feel free to reach out to us. We can always be reached at info@gncc.ca. And lastly, thank you for joining us and stay safe.